Hi everyone, Andy here. Welcome to the Crypto Wealth Cafe, brought to you by Dacxi, powering serious crypto wealth for serious crypto wealth investors. It is time for our weekly look at the markets. Time to do what we always do at the beginning of the show. Fire up the kettle, make yourself a nice, warm, hot, relaxing cup of tea or a stimulating cup of coffee. Or of course, if it's dark where you are, you have my permission to crack open bottle of wine, pour yourself a dram of whiskey, whatever's good, whatever suits your mood, that is good with me. Let's get into it. So if we start over here at coin market cap, and we can see Bitcoin 39,750, Ethereum 2,932, and quite a good jump up from yesterday. We'll look at why in just a second. We did get down to around 38,000, maybe almost 37,000 on Bitcoin yesterday. But really, it's the same old story. If we look at, the 7-day performance, just a small rise on both from where we were a week ago. And really, even if we zoom out to 60 days ago, really in exactly the same place. So same old story, really, just kind of going sideways at the moment, a little bit up, a little bit down. And crypto fear and greed index, well, we're back in extreme fear, so we're not really making much headway, I'm afraid, as we go deeper into the year. And we can see this on the Bitcoin chart. Again, same old story after this kind of steep decline towards the end of last year. And then we're just been struggling to make traction. So we go up, we go sideways, we go down, up, down, up, down, up. We did well. We got up to $48,000 sideways, and then down, and really down, down, down. And then today a little bit of a pop today. So reason for that pop is, well, the Fed came out, and no surprise, they're taking a hawkish stance as they try and moderate this runaway inflation that all countries are dealing with. And I suppose, there's not too much news here. Mostly this was priced in, but we have seen all markets kind of rally a little bit today, just based on what they expected the Fed to do. And that is what the Fed has done, which is raise the official US interest rate by 0.5 percentage point. They're going to reduce the size of the balance sheet by $47.5 billion a month for 3 months, and then up to $95 billion a month starting in September. So, the move comes as inflation surges to the highest it's been in 4 decades, which, of course, is just one of the big stories in markets and economies all around the world. Inflation is much too high, and we understand the hardship this is causing, says Jerome Powell, and we're moving expeditiously to bring it back down. So, the Fed is doing what it can to kind of keep inflation under control. In the meantime, markets are struggling this year. We've had this nice little pop this morning. So again, nice little pop, almost 5% yesterday. But in the bigger picture, we are struggling a little bit. Now, our old friends at Glassnode Insights, let's just see what they say this week on their on-chain analysis. They say, well, it's a peering into the abyss, not the most cheerful title, but they say that Bitcoin investors are hanging on to the edge of profitability, with short-term price action threatening to put them back into the red. But meanwhile, a constructive confluence of macro indicators are developing into a clearer picture of a potential bear market floor. So I think, what they're not saying there is, I think there's a wider recognition now that we are and have been really in a mild crypto bear market for some time, but we're just not seeing those extreme capitulation events that we've seen in past bear markets. So they say that markets continue to recoil in the face of inflationary pressures, tightening monetary conditions, and compounding uncertainties. This week before today saw significant weakness across equities, bonds, and cryptocurrency markets because, of course, crypto is, like it or not, perceived as a risk asset and very much correlated with particularly tech stocks at the moment. So despite trading down this week, Bitcoin markets have remained surprisingly robust on a relative basis. While the S&P 500 and Nasdaq index traded to new local lows in a bearish trend, Bitcoin prices remain range-bound, continue to lack any definitive macro momentum in either direction. That's what we've been saying. It's just sideways. With that said, correlations between Bitcoin and traditional markets remain near all-time highs, and a broader perception of Bitcoin as a risk asset remains a significant headwind. Could not have said it better myself. So if you want to see all their charts and on-chain analysis, you can, of course, find that on the Glassnode website. See if they have a snappy summary. Current market structure for Bitcoin remains in a delicate equilibrium, with short-term price action leaning bearish, whilst longer-term trends remain constructive. Capitulation of long-term holders appears to be continuing, with further evidence of that this week. And while macro forces and correlations with traditional markets do continue to drag Bitcoin lower, however, numerous fundamental indicators are approaching noteworthy points of undervaluation. So a capitulation event alongside developing divergences in short and long-term trends continues to make Bitcoin one of the most fascinating assets to monitor within the wider macroeconomic environment. It's kind of a fancy way of saying we're going sideways, but we could go down in the short term and up in the long term. So with that said, what I want to do today is just run through really quickly a few charts that show exactly that point. No one really knows what's going to happen. I mean, that is the big, ugly, obvious truth in markets. While there's all sorts of commentators and chartists out there who make very convincing arguments to say, you know, this asset or another asset is going here or there. Sometimes they're right and sometimes they're wrong. It is as simple as that. And while it's fun to look at all this stuff week to week, day by day, it's what I do. I think really there's no certainty in this game, which is why it's important to have that long-term wealth builder mindset. I think it's much more certain to think that in 10 years' time, the Bitcoin price will probably be significantly up from where it is now, and that is probably the same across the wider blockchain space. But it's very difficult to say on a shorter, day-to-day, week-to-week, month-to-month, even year-to-year. Much harder to predict where the price of any given asset will be. And again, so what's the lesson here? We take our position, we dollar cost average in, or we just buy a bunch and then just sit on it for 10 years. That is what I'm doing. So let's just look at these charts I was talking about. So this is some of my, these people have got strange names like Blunt's Smart Contractor, and he's got a strange cartoon avatar. Don't worry about that. Just means it's just because these guys are anonymous on Twitter. But they're, I would only show charts from people that I think are widely respected in the industry, even though any technical analyst will be the first to tell you that they are just charting possibilities with small amounts of probabilities, and they can be wrong just as much as they can be right. But Mr. Smart Contractor here, he's bullish in the short term. So he says Bitcoin is sitting on that ending diagonal wedge resistance. Break that, and we see fireworks. Still thinking we see $43,000 to $44,000 in the next week or two. So this is 2 days ago that Mr. Smart Contractor posted that chart. So he's targeting up here. So we go down, and then today, well, yep, boom. That was today's breakout. So broke out of that triangle, and so yeah, he's saying we could go up a little bit, bounce back down, and then boom, up to 44k. So there's one bullish scenario for the short term. Now these guys, Stock Money Lizards, ridiculous names, I know. So they think we're in this, still in maintaining a bullish momentum in an upward channel with higher lows continuing to be made. So you can see we're here, higher lows here, 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 and just means, are we going to keep swinging up? So it's fascinating the way that these different chartists can find different confluences of symmetry in the Bitcoin chart, sometimes to match their own particular bias. But so there's another argument for ongoing bullish continuation, if you like. Plan B at 100 trillion USD. He, of course, is famous for being the author of the once very popular stock to flow model. Slightly less popular at the moment, simply because those targets on stock to flow weren't met. I'm sure we'll talk about that more in other shows if Bitcoin does get back on track for stock to flow. But for the moment, I just thought it was interesting that Plan B acknowledged, perhaps for the first time, he says, technical RSI and on-chain indicators show that Bitcoin has indeed gone full cycle. So he's now saying we had a bull market top March, April last year, and we've effectively been in a bear market ever since. It's just, as we say, a much milder bear market than Bitcoiners and crypto people are used to in the past. So we haven't seen a really intense capitulation event. And it's not to say that we won't, we still could, but one argument that we haven't is because we didn't get the same kind of euphoric extreme blow off top. So in other words, as the market continues to mature and get more liquid, the highs aren't as high and the lows aren't as low. Not necessarily, it's just slowly decreasing volatility over time. But so just looking at the RSI indicators, we're down on the bottom again. It's just a matter of, do we go even lower? So I suppose the good news is, if we are in a bear market, it's very mild, and I think we can wait it out, no problem there. So we talked about stock to flow, also interesting from Plan B. So he just posted this yesterday. He says his original stock to flow model back in 2019, which is, I think, that's the gray line. So Bitcoin price is tracking that better than the updated 100K model, which is the white line. So it's a bit hard to explain all of these different models, but just depending on which stock to flow model you'd like to pick. The Bitcoin price it's slightly below, but still kind of in the range. So be interesting to see. As Plan B says, interesting to see what Bitcoin will do over the next 2 years in terms of tracking that model. But again, on a long enough time frame, that model says up and to the right. All right. Just want a couple of perhaps more bearish charts. So Bitcoin Guru, he's a very accomplished technical analysis. So he said a few days ago that after a long wait, the bearish monthly signal has been triggered. That means we're in for a 40 to 60% capitulation drawdown from the current levels. So if it was 40% down, that would be around $23,000, where if it was a 60% drawdown, that would take us down to 15K. That's low. I don't really think we'll go down that low, but again, you can see the kind of the symmetry playing out on the chart, and just saying, yep, due to go down. So there's a bearish chart. Dave the Wave, who I often mention, he doesn't quite say it here, but this is just his updated. We're getting to the business end of this chart, and Dave he gives the chance of breaking down probably 80%, whereas bullishness 20%. So all this is just another way of saying, really, with so many people calling for either melt ups or melt downs, maybe the real pain trade is to chop sideways in risk assets for a long time. And I wouldn't be surprised at all if that proved to be the case. Can you imagine if Bitcoin just continued to trade in this range for the rest of the year? It would be immensely frustrating as we go through it. But I think in the longer term, it doesn't matter. It's just continuing to strengthen and consolidate as global crypto adoption does kind of continue. It doesn't matter too much what the price does in the short term, it's what it does in the long term. So, Bitcoiners like to talk about a low time preference. So I'll talk a bit more about that in a second. But again, low time preference just means having that long-term wealth builder mindset. It's planting the trees of tomorrow today, and then just watering them, giving them time to grow, and not being too anxious about short-term volatility. So I thought this was interesting. This is a letter from Pantera Capital, who they were some of the earliest people into Bitcoin way back in the day, done extraordinarily well. But they talk in this new newsletter about blockchain being the first truly global macro trade, right? So what does that mean? So they say blockchain is going to change the world. The whole world, like everybody with a smartphone, will be using blockchain in a decade. 3.5 billion people, they say. And then they talk about, I'm not going to talk about the price there, but they say that's why so many macro traders love Bitcoin blockchain. It's the same concept they've worked on with other macro trades, but blockchain is actually going somewhere massively higher and changing the world for the better, they say. Okay, so they argue that we're in this institutional transition phase at the moment, right? So they say, institutional investors are in an uncomfortable moment. A few years ago, it would have been a massive career risk to propose investing in blockchain. Now, in a few years from now, it will be a huge fiduciary risk to not be invested in blockchain. But right now, we're in that uncomfortable interregnum period. That's a great word, interregnum. Means in between, but fantastic use of interregnum there. They go on to say that one observation we make is you don't need to get obsessed with trying to figure out which protocol will win. It's not productive to try and think, who's going to win, Ethereum or Solana. That's not how you pick an equity manager. You don't wait until the manager can explain which one company is going to win. You select a great manager and let them buy a great portfolio. That investment process should be the same in blockchain. So they're saying you don't have to pick between Ethereum and Solana. You can support or buy both and a whole lot of others. And so they say that the logjam is breaking. Massive institutions are just now investing. They've closed their blockchain fund at well over double their target, with a large influx of new institutional investors. All right. So here we're going to get to the crux of it here. It's really hard to get from 0 to 1, they say. It's taken 12 years to get these institutions to invest in blockchain. And they're just investing small amounts at the moment, like 20 basis points of their assets under management. However, it's not hard for them to grow their exposure once they get over that 0 to 1 chasm at the beginning. So they say that at the moment, these companies, institutions, they have 0.2% invested in blockchain, but that's going to grow to around 8% over the next 5 to 10 years. So that wall of money is going to drive prices way up. So Pantera, they said they've raised $2 billion since the beginning of 2021. So have their peers. All this money is coming in. And in the next couple of years, we and our peers will see institutions invest an order of magnitude more money into the space, which makes it seem almost inevitable that the blockchain market melts up. This moment in time is also uncomfortable because traders still think blockchain is supposed to trade in correlation to other risk assets. But eventually markets will soon realize that blockchain is different. There are no cash flows to discount. Rising rates have no impact on crypto. Crypto should simply be priced on supply and demand. And every 2 years, as 10x more people use crypto, there's a fixed quantity of something and 10x more people are using it and wanting to own it, it goes up. So they say they think that blockchain prices will soon decouple from other risk assets, and we can imagine a world where bond yields are above 5%, stocks are down from today's level, real estate is down, and blockchain is up 10x. So very bullish from Pantera. Not financial advice, but I thought that was a really interesting perspective, and that's why we say, 5 to 10 years. 5 to 10 years, long-term wealth builder mindset, low time preference. What do we mean by low time preference? So we've Googled it here, and it says, society grows when men plant trees that they know they will never sit under. It's quite philosophical, I like that. That powerful idea is promoting the benefits of delayed gratification, also known as low time preference. Bitcoin is often described as rewarding those who can demonstrate that quality. So, what is time preference? How is it relevant to Bitcoin? Again, so we've read that. Society grows when men plant trees that they know they will never sit under. Do you know about the marshmallow experiment? So it's quite interesting. It's a famous story. Basically, in the 70s at Stanford University, they did a study using young children and marshmallows. Each child was placed in a room with no distractions and given the choice. You can have a marshmallow now, or if you're prepared to wait 15 minutes, half an hour, they don't say how long, but if you're prepared to wait, you can have two. And so the study showed that those young children who were able to resist the temptation of an instant marshmallow and say, I'm prepared to wait, well, there was a correlation between those children and better SAT score outcomes. Now, this experiment's a little bit controversial. It hasn't always been easy to replicate those results, but I think the wider truth holds true, which, it's holding Bitcoin is an extreme version of the marshmallow test that never ends. Oops. And it's kind of I think it's an interesting idea. And the takeaway really is delayed gratification is an important life skill. So it's whether you're saving money in the bank or chipping away at stacking Bitcoin, or studying for a test or trying to improve any kind of skill, cooking or martial arts or whatever it is. It's putting in the work instead of just opting for the easy gratification of having the marshmallow or watching TV or playing video games or whatever it is. You understand what I'm saying? So, and you can get a little bit more philosophical when it comes to Bitcoin because sound money or Bitcoin protects value across time, which gives people a bigger incentive to think of their own future and lower their time preference. So you can think of money as just a way of storing your energy. So as an attempt to provide the ultimate sound money, Bitcoin can protect the value of your precious labor into the future. And that's why, the Bitcoin hold or hodl meme is so powerful, because hodling is shorthand for delayed gratification. It's about ignoring the drama and volatility of short-term price charts and setting your time preference 10 years or even more into the future and just trusting that Bitcoin's sound money characteristics will spread further and further around the world. Trust in the network, value in the network will just build and build over time. And simple as that, really. All right, that is today's episode. I hope you enjoyed that, folks. Hope you perhaps learnt something. But yeah, that's us for another week. See you again next week here at the Crypto Wealth Cafe. Thanks for watching. Bye for now.